Good day to you all and welcome to this special broadcast. I am Fifi Peters. Today, we will be talking about enabling equitable financial inclusion and how important it really is for Africa to thrive. So from the cash to the cashless societies of the future, what are the strong movements taking place for the economic empowerment of women right now? And what are the opportunities that are leading females, financial mavens across generations? What are they seeing? From the genre-breaking women of the 90s who led the way by fighting gender barriers and shattering glass ceilings, to the tech-savvy generation of women who were using technology to equalize the gender gap. To help me answer these questions, I'm joined by a panel of leading ladies from across generations and across the continent also. Let's meet them. Irene Kiwia, co-founder and chief growth officer at Adanian Labs. Buhle Goslar, CEO of Jumo's African region. Dr. Franny Lutia, senior partner, Southbridge Group and CEO of Southbridge Investments. And Anne Alika, global head, client coverage, Standard Bank Corporate and Investment Banking. So to Irene as well as Anne, great to have you in studio, and also to our guests connecting online, Dr. Franny as well as Buhle, good to connect with you. And I would like to start off perhaps with some of the ladies of the 90s who were the leading mavens, as it were, in shattering some of the glass ceilings that women of today, many women of today, are able to enjoy. And Dr. Franny, I'd like to start with you. And I'd like to start by introducing you to our viewers by way of just reading some snippets of your resume. So for those who do not know you right now, you do have a long-standing global experience in the private, public, as well as non-profit organizations. You've had an illustrious career over at the World Bank Group as Chief of Staff to the President and Vice President. You were Senior Vice President at the African Development Bank. You have founded 2 companies. You're a member of the World Economic Forum's Regional Advisory Group for Africa, and you sit on a number of boards at respectable institutions, among them the UN Foundation as well as Orca Explorations, a gas exploration company, I am told. So an impressive resume, but give us some color as to how your journey to the C-suite has been, ma'am.
Well, thank you very much for having me, and thank you for that wonderful introduction. I was born and raised in rural Tanzania. And as a child, I was very curious about nature and science. And so when I went to school and studied mathematics and physics and chemistry, I ended up going into engineering, which at the time was really not a field that young women, at least in Tanzania, were going into. But that propelled me into a career in engineering, which I studied in the United States, and then ended up working in the infrastructure department of the World Bank and investing in infrastructure development in developing countries. So with all that work, I learned a lot and grew as a young professional, and was able then to use those talents that I gained over the years to develop a career in development finance and eventually into investment banking. It really was a step-by-step process with a lot of learning along the way, working in different regions of the world, starting with Latin America, then Asia, Europe, and then eventually going back to work in Africa for the last 10 years. The journey has been one of, I mentioned learning already, but secondly, of getting support, particularly from mentors who are all men in my case, and therefore the real importance of having the he for she agenda to really work to support young women. And I would say that now we are at a tipping point in some sectors where it has to reverse, and women have to support young men. Because when you look at universities these days, the majority of graduates are women. So in some sectors, it's actually flipping, where women now have to play mentoring roles to raise the next generation, not only of women, but also of young men. And then the last thing I would say that was critical was being able to have those opportunities to experiment, to fail, and learn from failure, because that's really the key aspect of a journey of career growth in these complex sectors of finance in developing countries. I'll stop here for now because I think we'll have an opportunity to go in more detail later on.
Certainly we will. And so I'm going to allow our viewers to get to know you a little bit more. Also reciting some of the key takeaways and highlights that I found on your resume. So currently, you are the global head of client coverage over at Standard Bank Corporate and Investment Banking, the largest bank, depending on how you measure, but the largest bank in Africa. You were head of investment banking at the international division, having occupied a similar role in the Africa region between 2015 and 2021. You have been the executive and head of investment banking at Stanbic in Nairobi, also in your past, having provided solutions for various clients across the spectrum, project finance, capital markets, advisory, you name it. You also, I see, had a stint over at Stanbic's Uganda branch. So I know that no road is without some form of disruption, no journey is without some form of disruption, be it roadworks that we're talking about, a pothole here and there, or maybe a stubborn bull if you happen to be driving in rural Africa. But how has your journey essentially been to management and C-suite level?
Thanks, Fifi. And it was actually really wonderful to listen to Dr. Fanny's discussion and story about her career. And I think really it mirrors hers to some extent. I've been working a little over 35 years, and I didn't start out in banking. And I often reflect back on my first job. I was the only woman in a team of men, and it was just a question of the time. So that was back in the late 80s. And when that happens, you are joining a team of people who don't look like you, who don't sound like you, but actually you're all doing the same role. What that tends to mean is you feel a little unusual, you feel different. So you're overcoming actually your sense of self. And the reflection point really is this question that I often hear people talking about, imposter syndrome. And what I was saying to one of my colleagues earlier today is just put that in your handbag, carry it with you. All it means is that you're doing something new to you or something new to the people that you've joined. So I started working in the UK back in the 80s. I joined financial services probably about 25 years ago. Mm-hmm. And like all men and women, I've simply worked my way up. I've done different stints. I've always been curious, and I've always been deliberate around reading policies, but curious about my clients. And I think really the journey has been driven by that sense of curiosity. And curiosity means you're driven to make a difference to your client and a difference to the institution you've been in. Curiosity also has enabled me to take on different roles and be willing to try something that I'm not good at, something that I haven't tried before, something that I've had to teach myself. But when you're used to carrying that imposter syndrome in your pockets, you sort of get on with it.
I've never heard someone describe imposter syndrome as a form of accessory, but I'll take it. I'll take it, and I like the definition that you've mentioned in terms of all it means is that you're learning something new. Irene, I'm coming to you in just a moment. Give me a moment. I want to come to Buhle first because let's enter perhaps the tech savvy generation, as it were, women that are employing technology to perhaps take even further strides than the genre breakers that we were describing a little bit earlier. So, Buhle, allow me to introduce you, please, ma'am. So, currently CEO of the Africa region for Jumo, which I understand is a fintech company that was founded in 2015. You've got deep expertise in inclusive finance, covered quite an array of markets like Anne and Franny, working in sub-Saharan Africa, in Europe, in Asia, and across various sectors from financial services to tourism. I see that you're also a certified retail banker, and you also sit on a number of boards, among them e-commerce company Copia, as well as WEMA, I believe, which is a gender equity advocacy platform. So just and saying that her journey very much mirroring that of Franny, who outlined the importance of support and mentorship along her journey, and talking about the importance of curiosity and being intentional. Reflect your journey for us so far, and how it does mirror what has already been shared.
Yes, I definitely heard a lot in there that is similar to my own journey. I think one of the things which is, I guess, a golden thread in what everyone has been saying is this element of being an outsider or being the one and only in some of these rooms, and that I definitely experienced. I mean, for me, it was something which I think actually even predates entering the corporate sphere. So I was actually born in Zimbabwe as part of a minority tribe. So from the very beginning of my life, I was used to being, in a minority context. I started my career actually in travel tech. Which is the tourism aspect of my CV. And I worked for a French company where, although I speak French, I was the Anglophone in management amongst predominantly Francophone management team. I transitioned from there to investment banking, then retail banking, and finally now I'm working in fintech. And I think that, when I reflect on my career, one of the things that I see both for myself and also for my friends and other peers who were building their career at the same time is that it took us a while to really connect with the purpose of a career, right? And the thing I'm talking about is income. So for the longest time, we were working so hard to make sure that people would see our value, would understand that we were worthy of the roles that we were in, and we neglected the income aspect of it. And I remember it was probably probably in our mid to late 20s when we started to have these conversations around money and what should we be getting paid, and realizing actually by that stage that a gap had already started to develop for us as a group, right, as women. And I think for me, that was a really pivotal moment in my career where I shifted from focusing only on my performance to also ensuring that I was being adequately compensated for that. Because, for the longest time, because I'm such a passionate person, I was so focused on the impact of the job. When I was in tourism, how do we bring small entrepreneurs into the net, right? So that they can also access wholesale tourism opportunities. When I moved to retail banking, I was concerned about, who's being left behind. And the whole time, I think it's very easy for us as women to forget that income also needs to keep up. And I just mentioned that because I think, we're going to talk about financial inclusion. And I think when we talk about careers, we would be remiss in not talking about how our perspectives around compensation have also shifted as we have grown.
Okay. Very important point. I think according to the latest report from the World Economic Forum, that gap that you refer to in terms of pay, around 200 years big. None of us, or perhaps a combination of our ages in this panel, actually meets that. But who's trying to combine ages in order to be in the same level of getting paid the same for doing the same amount of work? I think that many women, particularly even the women that are coming behind many of us, on this panel, would certainly like to see that day coming in their lifetime. But I'm going to come back to you, Buhle, in just a short while as we just get to meet our last panelist, last but not least panelist for today. So Irene, your resume, ma'am. Co-founder and Chief Growth Officer at Adanian Labs, a Pan-African tech venture, I'm told, that is into scaling technology businesses. You're also a founder of TWA, which is a global networking platform that helps women connect with one another and build thriving digital communities. Another founder of Equitable, hope I'm saying that correctly, an AI-driven fintech platform, and a founder of African Blockchain Center. What haven't you founded? But anyway, a Pan-African Web 3.0 company focusing on building blockchain capacity. So amongst all the numerous other accolades that you have been bestowed with, including being the 2018 Obama African leader. So just sum up in terms of your journey, how it's been like for you to achieve these milestones that you have in your career, and whether it's been a disruptive journey or smooth sailing.
Well, thank you so much, Fifi. Great to be here. So my journey has been quite interesting. I have always been an entrepreneur. I started my first company in 2004 when I graduated from the University of Dar es Salaam. And I was driven by this vision, that as an African woman, I could build a global company. That's where I was coming from at that point. And I remember in 2004, starting your own business was not the thing that people did. So nobody understood what I was doing. It's not like now where you're actually encouraged to go be a founder of a business. So it was in a field that was not relevant at that point, as in there was not even an institution in Tanzania that was offering public relations as a course. So it was also a new avenue. And I ended up running that company for 16 years. I partnered with a global PR agency, Porta Novelli, and we became the African representatives. And it was a company that had a presence in over 80 countries. And what happened during that journey, as I was servicing multinationals, not just in Tanzania, but across Africa, I believe I found my passion very early on. I was on a visit, for a client, doing research that took me to 12 regions in Tanzania. And in the evenings, I'll spend time with some of the young women I met. I was very ambitious. I wanted to build this global company, and I wanted to service companies across Africa. So I would talk to these young women to just find out what it is that they wanted to accomplish, what they wanted to become. And by the end of that trip, when I went back to Dar es Salaam a month later, after going through 12 regions, I realized that I was very, very fortunate that I had a university degree. I was able to create employment for myself and others and create wealth for myself, because 85%, and I'm being very generous here, but 85% of the women I met, the young women I met, lived what I've come to term as a per day lifestyle. How do I put food on the table in the next 24 hours? How do I support these children that I've had from when I was 13? So that's the reality. So went back, started a corporate social responsibility program to empower women in rural Tanzania.
Sure.
And we ran a lot of mentorship platforms. We created awards because we wanted to create more role models for women to be to relate with. And through that journey, that program just became bigger than a social responsibility. And it's a journey that actually led me into technology 16 years later, when I wanted to leave my PR business. And I wanted to now create a platform where the women I met in rural Tanzania could access basic things like access to finance, be capacitated so that they can grow their businesses, so that they can access bigger markets, so that they can create wealth for themselves and their communities. Sure. And that's how in 2016, I explored a whole avenue around technology and ended up co-founding Adenian Labs, Eco-Batwa, the Africa Blockchain Center. And what we're doing is truly building a company that will create solutions for Africa's underserved. The face of Africa is informal. Over 80% of this continent is in the informal sector.
Sure.
So building solutions around that. And my passion is, again, access to finance for women.
Perfect. So now that we're all acquainted, nice to meet you all. A common thread that came out in most of your introductory comments is the fact that you were either first or one of few in the room when you stepped in to these positions of a relative advantage at that time, but obviously a lot more advantage given the roles that you occupy right now. So Dr. Franny, to come back to you, ma'am, I'd like to know, has the picture changed? And as this is a discussion around financial inclusion, to what degree has money, be it money that's used for investment purposes or money that's used for providing loans, as it were, to what degree has money helped to close that inequality gap or not?
That's a fantastic question. And I think, first of all, things have changed. Today, if you look at the University of Dar es Salaam, where I graduated, the majority of students in engineering are now female. So it has flipped from being the only one to being the majority. And that has happened in my lifetime, which is quite an amazing transformation. In terms of the world of finance, I think things are changing. They're not quite there yet, but they're changing. And there are three major enablers. The first one is technology, particularly the digital technology, which has now penetrated all the key areas of geography, and that has allowed access to finance to women who would not be seen before. I give the example of what we do in my company right now. We are able to issue loans to small and medium enterprises, either led, owned, or managed by women. And all we require from them is a national ID. And we use then machine learning and other AI techniques, along with psychometric testing, to basically learn more about their credit behavior, their investing behavior, and so on, and then give them more loans or more access to finance. So technology has really opened up the space. The second, I believe, is the degree to which the economies are now integrated, rural and urban economies, but also cross-country, because women who have great ideas are now able to have them travel. You take an example of a very fantastic cake baking woman in Kenya who's able to sell her cakes all over Africa because you can order them now on your digital phone. She has partners all across Africa who can bake with the exact recipe that she has developed, and you get your cake delivered for your birthday, for your child, or other event wherever you are. That's a digital economy business with access to finance that would not have been possible before. And regional integration has helped. And then finally, I think the last area is precisely the kind of programs like the one you're running, where by bringing these examples and stories, young women across the world are able to learn what has worked for somebody else and whether that can also work for me. And so in a way, through this story sharing, we're able to transfer lessons and ideas that then go widely, because a lot of people are watching your program, for example, right now, or they'll catch it up later on YouTube and share it. And those lessons become really important because it's spreading mentorship on a broader scale. So those three things have changed, but there's still a lot of work to do.
Sure. And I suppose maybe we can even wrap up and talk about what more can be done towards the end of the discussion. But Anne, I want to ask you, just representing the traditional banks, as it were, who have innovated, I'm mindful of. But what we have seen in the last decade specifically is this acceleration of these fintech players who have identified gaps in the market, identified a huge underserved market, be it the informal market, be it women in those markets, be it young people in those markets, and made access to finance a lot easier for a group that traditionally was underserved. So essentially, I like to think of it as it also gave traditional banks a bit of a wake-up call. And just as you reflect on what has changed since you started your career and where you are right now, are banks woke, or is your industry still snoozing a bit?
It's a good question. It's also probably a little bit of an uncomfortable question. So I think if I look at we can look at the bank from two perspectives.
Sure.
One from the perspective of women in executive positions making real decisions and differences, because I think that is relevant and important because we bring a different perspective to things. The other approach is to look at it in terms of the clients we serve and whether or not the way in which we do business also enables access. Because as I was listening to Irene, to Dr. Franny, to Bukle, we talked quite a bit about access. And access is really about talking about how you address a market in a way that enables that demographic or that client to access your services. So previously, the reason we, I think, struggled from a financial inclusion perspective is that we were sort of socialized as bankers, we were socialized to go and speak to men. Men were socialized to be comfortable talking to banks. So it was not, I don't think it was ever a deliberate approach to exclude women, particularly in the last 50 years. So things have changed quite a lot. So if I look at it from a banking perspective, we all have a lot more to do. Within Standard Bank, we now have about 35% of our executives are women. It's up from 2021, which is 34%, not good enough. However, if I look at it from a revenue generating perspective, remember that is real. That is people who are making decisions that lead to wealth creation that that speak to the clients, there's about 45% odd, and that's important. But your question of are we woke? We have recognized that frankly, the commercial opportunity to bank women is real.
Sure.
So it is in addition the right thing to do. It is actually a commercial opportunity that leads to revenue. And so many of our subsidiaries have actually started particular approaches that are really targeted at addressing women. And that is not because we're kind,
Sure.
but because there is a gap in the market. So if I think of Stanbic Kenya, they have the Dada program. If I think of Stanbic Uganda, they have a particular access for women, which not only enables women, SACCOs and groups to borrow, but also provides them with access to additional services, such as insurance services.
Right.
That's really important. In Mozambique, we do quite a lot of entrepreneurship training. We've had 144 women graduate from that particular program. So it's something that is becoming increasingly, I wouldn't say quite common, but we do see it as a market opportunity. I don't know, does that mean we're woke?
I think so. But I also like the perspective that you provided. So you're essentially saying that it has been an impactful intervention, particularly from a Standard Bank point of view, to look at the gap at the top. So top-down approach, addressing the level of management there, changing the perspective in which you view business, and lending a lot more to underserved markets. And you're seeing the impact of the bottom line, essentially, is my understanding of what you said.
Yes. I think when you see a gap in the market and you serve it, you see the impact on the bottom line. And for women in the bank, when we see senior women making real decisions, so we're talking about setting strategy, we're talking about creating policy, we're talking about recruitment, mentorship, and actually seeing someone who looks like you in the room is a powerful, powerful way of influencing people.
Sure, got you. Buhle, I'm going to ask you an unfair question also. I don't think it's unfair, it's not intentional, but just try to bring all perspectives in. So traditional banks, we know, are governed by a traditional regulatory system that tells them exactly how much they need to keep on their books and in their vaults in terms of reserves and all of that. So they have to be prudent lenders, not because they want to, but to prevent a situation whereby people who've got money deposited in the banks can't get it out, or to prevent a situation whereby businesses who come to look for lending can't get the money because of mismanagement, as it were. And we have seen a case of mismanagement unfold recently over in the US, where you can put it on a whole host of reasons, but one of the reasons why we did see a fallout in some of the regional banks out there was because of perhaps a lack of prudence when it does come to risk management, and also a lack of prudence when it comes to lending. So just this view that perhaps banks can be a bit hard in terms of providing access to finance, and can be a little bit strict in terms of how they look through the lens of inclusion. Is there also not merit in terms of the prudence that they also practice as really important institutions in the economy?
Yeah, so absolutely. I think that prudence is not really the issue from my perspective. And we work with banks, right? Our platform is a B2B2C platform. We work with banks and mobile money operators. And in fact, we've had to build out our platform to ensure that we have all the risk capabilities which our bank and mobile money operator partners require, from your sanction screening, AML, and so on. And in truth, yes, it's great to have technology. The fact that we have cloud-based computing allows us to lower costs of providing services to customers. We embrace machine learning and AI because it allows us to deal with segments like women or agripreneurs who have really very thin digital footprints, to aggregate all of that and find ways to serve them with loans. So I don't think that prudence is an issue at all. I think what you need to do, though, is to think about how you can bring the two together. right? So you want to use the technology to drive empowerment, but you definitely want to make sure that you still have the right level of prudence, and that policy and regulation also really thinks through what some of the unintended consequences might be. It's a balancing act, really, is the way that I look at it.
Okay. Irene, so you're nodding there. Just given that you play in similar spaces, what's your view on it?
So I'll talk from the bottom-up approach, right? You know, we've done a lot of research in the market, especially again in the informal sector, and access to finance specifically focused on community savings groups, because our research showed that over 80% of women who are underbanked access finance through community savings groups. They have different names in different countries. In Kenya, they're called chamas, in Tanzania, Vikoba. Here in South Africa, Stokvels, Susus, and et cetera, et cetera. And when you look at that segment, and the reason why they have not been bankable, you know, is that disconnect between the fact that, you know, this model operates offline, where it's not digitized. Banks want to support this segment, but they don't have the information or the infrastructure to understand them. So we were thinking of, you know, how do we bridge that, where we can digitize the model so that it's accessible, etc., and then be able to invite formal financing. Because even with fintechs, there's so much that you can do without the formal financial support or the formal financial infrastructures, whether be it of banks or microfinances, etc. So in terms of prudence, you know, what technology does, and I think that's where a huge opportunity is it allows formal financing to look into new segments with new eyes and new nuances. So in replacement of formal collateral, you know, maybe, you know, observe the behavior and pattern, you know, of the people in question, on how they save, how they lend to each other, how they pay back, how they access a marketplace, you know, look at all of that and use that as collateral to create more friendly products, right? So yes, the prudence is important, but I think we need to now look at this technology, because even if we talk about AI and all these different things, you know, data collection is very critical. So how do we ensure that we are able to collect enough data, right, to understand an economy so that we can create more reasonable solutions?
Sure. Let's stick with the informal market, and maybe you can just give us some color. I know you head up corporate investment banking. I know. But I believe even some of the corporate and investment bankers, perhaps who are your clients, are coming to you to actually serve clients who are in the informal market. And we can't not talk about the informal market in Africa, just given the fact that that's where the dominant activity, commerce activity does take place. Just perhaps a general view on your thoughts on how you're looking at that market, and more importantly, the level of inclusion that you have seen or you're trying to strive for as a bank, particularly when it does come to women.
Thanks. As a corporate investment banker, actually, I love the comment Irene made early on, which is a picture of Africa's informal.
Sure.
And I think that's whether we're men or women, it is particularly common across sub-Saharan Africa. I often say South Africa is our most formal economy. So if you can capture South Africa in one of the other large economies, then you're actually able to bank and grow the business on the continent. But to your specific question, do we have particular programs, or are we able to address the informal sector, particularly around women? In my last answer, I referred to one of the programs we have in Kenya, which is Dada.
Sure.
And that particular program actually looks at this question of information, statistics, a track record, which has often been the barrier for the informal sector. And those of you who are familiar with Kenya, you know, M-Pesa is ubiquitous in that region. So whether you have a smartphone or you use USSD, if you're able to transact using M-Pesa, what it actually means is you have data on someone's activity over a period of time. So that data program, and I think my colleagues in Kenya have been fantastic in actually coming up with it, means that we were creative about where else does data come from? How else can we look at this? How can we use what is going on in the market to to provide people access, because we have the information, we have the data, so we can apply our standard practices to people who on the face of it looked as though they were simply in the informal sector. Actually, they're not informal, they're just doing business in a different way.
All right, okay, I like that. Or maybe for statistical purposes, we just have to keep them in those classifications, but I like the reclassification and a different perspective of looking at that. Buhle, I know that you play in the space quite a bit. You're passionate and you've done quite a lot of research around inclusion, particularly as it does come to players who play in a different market to the formal market, aka the informal market. Forget my silliness. But just your thoughts on advancing financial inclusion, particularly in Africa's informal economy.
Thanks, Fifi. I think there are two things which concern me. The first is scale. I don't think that we're moving fast enough when it comes to scale. I think we have, not to belittle the progress we've made, because as we've all said, we are seeing more inclusive banking, we're seeing more fintechs, and we're seeing the mobile money story really take root and blossom across the continent. But when it comes to products like lending or insurance and so on, I think that we need to see more scale to really start to make a dent. The second issue that concerns me, and this I think is what's really impacting women, is the fact that capital follows the path of least resistance, right? And when I look at the path to getting capital into the hands of women, I see that there are still a number of friction points, right, which we need to address. And not all of them are at a product level. So to give you a sense, as you said, we work in this sphere, working with retail banks and mobile money operators. In fact, our data engine Unify leverages mobile money and GSM data. So all these P2P transactions, with people buying airtime top-ups and so on, we use those to score people. And when we started out on this journey, our hypothesis was that because mobile money usage is growing, and especially in East Africa, ubiquitous, Ghana's actually also seen huge traction in the adoption of mobile money. So our hypothesis was that truly our platform has its doors wide open to everyone. So, about 2 years into our journey, imagine our surprise when we did a deep dive research to find out, truly beyond just what we're seeing on KYC, what percentage of our customers that we're serving are women. And the number was under 25%. We were floored. And we started to try to look to understand what on earth is going on. There are a lot of upstream issues, right? From just device ownership, even your basic feature phone. Our view had been that because you could access our product on USSD or app, that again, the doors were wide open to include all. But then you find that actually women are often sharing phones or have no access to a phone at all. So that needed to change. Then we realized that really in thinking about how you design a product, you do have to be sensitive in the entire customer journey, how the product is marketed. There were certain things, language that we used in the journey, which was causing drop-offs with women. We had to address that. We had to start to look at what are the data points that we're leveraging and in what ways do women get left behind. So I mentioned earlier that, there are certain segments where the data trails are thin. So what we might call in banking thin file. And we started to build scorecards that leverage different types of data where we'd be more likely to actually find women, and also agricultural workers, incidentally, are also typically left behind because of thin data footprints. And I think the thing that we sometimes don't think about is that generating a digital footprint actually costs money, right? You are topping up on airtime. You are sending money, which means you have money to send. And in Africa, we have a huge income problem. It's a global income problem, but it affects women even more because women typically are involved in a lot of unpaid labor, just working for the family, things like that. So they just have less money in their pockets. So all of these are barriers that you need to address. And going back to the experience, one of the other things that we found was that if you didn't have enough female mobile money agents, because, you know, once you take a mobile money loan, you need to cash out at some point. Because in addition to being largely informal, Africa is still a fairly cash-based economy. And we found that, you know, women wanted to have, you know, in areas where we had more female agents, women were more likely to actually adopt the product. So, you know, and I mean, there are myriad more frictions which need addressing. But, you know, for me, this is something that we need to continually think about, the fact that capital follows the path of least resistance. What are the, you know, the friction points that continue to exist? And the scale component, as I said, I think really, really critical. I mean, we've done about $5 billion. We've originated about $5 billion in loans on our platform. That sounds amazing compared to, you know, smaller fintechs on the continent. But really, when you look at it in the context of the financing gap that exists for the informal economy, we've barely made a dent. And, you know, there's so much work that we need to do, but I think these two things are really critical to address.
Okay, great insights there. I suppose maybe next time we invite some of the telecoms operators to the table, find out why there is that split in terms of ownership of handset devices. I wasn't aware of that color, but thanks for exposing some of the bias that you exposed yourself to based on the research that you were able to do about how much scale and penetration you thought you had compared to exactly what you were doing. But Dr. Franny, then perhaps we shift the conversation to further acceleration. And I say further acceleration of financial inclusion because you started us off by talking about some of the key accelerators that had helped increase financial inclusion over the years, highlighting technology, highlighting the integration of economies, and also highlighting platforms like this where women are able to share their stories and exchange ideas. I think the point that Buhle has just left us with is the fact that we have done a lot, but to get to point B to C or C to D, we need to think about doing things maybe a little bit differently and perhaps add a little bit more impetus to how we move forward. So let's talk about moving forward better then. What would you throw in that hat on how we achieve that?
Thank you for the question, Fifi. I would say, first of all, even though we've made huge advancements in access to finance for women, that's mostly debt finance. Equity, which is what allows a woman entrepreneur to grow her company, to go into different markets, to bring in new products, to innovate. Equity financing is still very, very severely limited when it comes to women entrepreneurs. So that's a big gap in the market that we need to address. The second area is networking women entrepreneurs so that they can actually have more access to markets, exchange ideas, and create networks that are very powerful that would sustain multiple generations. And this is really important because when you look at how companies typically grow, they grow from being able to have your first client, obviously, but then after that, having a network of clients that you can engage with. And unfortunately, because of the reasons that we just heard from our previous speaker, where access to very basic things like an income to start with, or like the proper technology in order to then have opportunity to take those technology solutions that are out there. Once those are addressed, the remaining part really is sustaining a network of support, a network of ideas, a network of potential clients, investors, and markets. And I think this is something we still need to do a lot of work on. And then the third one is more structural. When you look at the economies, particularly the economies in Africa, women are sort of trapped in very particular sectors. For example, food and nutrition, because they grow the food, they send it to the market, they're able to play in that sector quite well. And so once you remove the barriers, they can grow. But then there are other sectors where women at the moment are very few and have significant barriers to enter. For example, even though we have quite a few women represented here, the banking sector is one where there are not that many women. There are very few women who are actually making allocation decisions for investment. And studies have shown that if you have a woman who makes a decision in an investment committee, she would most likely see opportunities in other women's ideas. That the same idea presented by a woman and a man, the one by the man has a better chance of being invested in, even if it's the same idea presented by a woman. And so if you have women making decisions in these investment committees, in the banks where equity and debt decisions are made, that really helps to improve access to finance for women. And those are structural problems because women are not really present in those sectors. And then lastly, I'll talk about governance because this is really key. Studies done by the IFC, by the World Economic Forum, have shown that when you have women represented on boards, not only do those companies perform better because they're better at risk management, but the women who are on those boards are able to bring a perspective that allows those companies to see opportunities that they otherwise wouldn't have. And I think this is the next barrier on the governance side. So it requires women to actually select other women, or men also to select women as the first-time board member to bring in that perspective and then to help them grow. Because when you have a governance track record, you're actually able to move and work in different companies and different sectors because you learn a lot horizontal knowledge, which is useful in any other context. So for women who are trapped in a particular sector, they're able to jump into a new one when they have that broader governance perspective. So those would be the areas that I think we still need to do a lot of work on, and that the education system can help to encourage young women to go into fields that they otherwise wouldn't consider, bringing in support in terms of scholarships, mentoring, internships. Internships can open a whole wide world of opportunity. And I think we should really focus a lot on that. And for most companies, it's a cost-free act to offer an internship to a young woman.
Okay.
And then finally, on the structural side, to have support in terms of deliberate action to bring in women on boards, to encourage them and employ them in sectors that otherwise they wouldn't have gone through, and then to fix some of these barriers that were already mentioned by colleagues on the panel that prevent women from accessing technology, accessing opportunity in general, and having the starting point. Because we know once you put women at the starting line and you start the race, women win.
Sure. So guess what? We're fortunate enough, Franny, to have a decision maker at executive level in banking right now who probably looks and has to make decisions about what happens with equity financing and debt financing. And I'm wondering if you can guess who I'm talking about. But and jokes aside, perhaps we just pick up on the point then that Franny made, because there's a lot of women that we interact with as a business channel, CNBC Africa, various conferences. Women now, we're talking about the formal market, working in mining, working in infrastructure, working in manufacturing, sort of sectors that are quite important to the economy, formalized. They've got the track record, they've got all forms of requirements that they believe is required from the bank, but there's still some challenges in terms of the level of access that they are experiencing. So perhaps maybe give us a bit of color as to how equity financing, for instance, is looked at right now when it comes to female-led businesses.
Yeah. The reality is when we look at asset managers, those who allocate capital on the continent, we have very, very few women. Sure. So that is true. I agree with Dr. Franny. I think the real question is, what are we doing about it?
Okay.
Because I think we can talk at length about all of the challenges, but we all need to chip away at the challenges and come up with solutions. So back in 2020, the Africa Women's Impact Fund was created. And Standard Bank has been a lead sponsor of that. We have advisors we work with, MEDA and Rescura. And South Africa actually has the largest formal asset management business on the continent. But the purpose of that fund was really to ensure that we could provide funding to women asset managers. So if I build on Franny's point, we believe that women will make decisions differently, but then they need their capital in order to allocate. So we've started that. We do have quite a lot of investment that we've made in that, and it's something that we intend to grow that fund to a size of at least $1 billion. Mm-hmm. Early days yet, making great progress, having a lot of support. We have absolutely no doubt that there's some great female asset managers on the continent because we see them in our clients' businesses. We meet them. They're part of those management teams that we bank.
Sure.
And I know we're running out of time, but I really did want to make that because Bule's right. Capital allocation is key, and we must address the formal market as well as the informal.
And the support also being mentioned, being very deliberate in the support, the internship programs, the mentorships. And so you're talking about an initiative that Standard Bank is a part of. Internally, how are you trying to solve for some of the problems that we are discussing?
For our executive management positions.
Yes. Even the leadership programs that you're running, the support programs that you're running.
So we have quite a few leadership programs, and I struggle with this one a little bit.
Sure.
Because when I reflect back 30 years, things have really changed. We're not there, but things have really changed. And when we talk about leadership programs for women, it's really about not simply access, because we have leadership programs for all of our staff, but being deliberate around mentorship, making sure we're not coaching women to act like men.
Sure.
Yeah,
Sure.
but to really bring themselves fully. And our targets are there because they are real, and our targets are there because we understand that unless we do so, we don't have the ability to actually get the best talent. And best talent is across the genders. So if you ignore a huge part of it, if you only have 37% of your executive as women, it means that there's, with 57% of your staff complement as women, of your employee complement as women,
Sure.
you're probably missing quite a lot of talent out there. So we have a women's leadership program. If you're in South Africa, if you're across the continent, you've probably seen some of our recent adverts about why she leads.
Sure.
Why she leads is important because it is us showcasing our women deal captains. These are people who are making decisions around debt, who are making decisions around putting equity into clients, who are making decisions about taking clients to the capital markets, listing either the debt capital markets or equity capital markets. These are women financial captains of industry. And we hope by showcasing them, when we're shining a light on what we're doing internally, but also saying to women out there, you have role models in Standard Bank.
And you have support, it would seem.
You definitely have support.
Irene, as we wrap up, Irene and Buhle, I haven't forgotten you. So we are talking solutions, and already both of you are acting in positions, as it were, to try and solve for some of those challenges. Providing the networks that Dr. Franny spoke about in the communities, building the digital communities, using technology to help advance the gaps. You're doing stuff. Yeah. Can you do any more?
Yes, there's a lot to be done, right? I think there's a huge opportunity for us as a collective to meet women where they're at. And yes, access to finance is one component, but there are other critical issues. Most of the women in the informal sector, for example, are already producers. You know, they're producing products or services. What they need is capacitation so that they can increase their production. You know, so there's a lot of knowledge and capacity building that needs to take place. We launched Equitable, you know, a community savings group platform where we digitize savings groups. And we thought, well, we're going to go to market, and you know, because they're struggling, they need access to the information, they'll come in running. But that wasn't the case. We had to do a lot of awareness creation, capacity building, you know, just training and informing and, you know, showcasing why it's important for them to, you know, run their savings groups on the platform. And then we had to invite other value addition, you know, value creation, additional partners,
sure,
like banks and lenders to come and lend into that economy. Then invite insurance providers, you know, so once we've aggregated them, then how do you bring all these other service providers so that, you know, you're impacting at a large scale? But you know, someone mentioned access to blended modes of finance. That is extremely critical, because yes, it's not just about equity, it's not just about debt, it's also about grants and all these other things, just increasing their productivity is a great thing. We launched this program called You've Got Business, where we just wanted to understand in depth, okay, if you have been capacitated, if you've been digitized, what else do you need? And we are running it in Kenya. We're showcasing women SMEs, and we are realizing that, it's going to take coordinated efforts. It's not something that one person can do on their own, because that one person requires multiple touch points for them to move from point A to B. But we're excited, and it's happening.
The work is going. Yes, the work is continuing until the target is met. Buhle, leave us with your final thoughts on the matter. Consensus, a lot's happened, a lot is happening, but your final thoughts in terms of, in your space, what you think can advance some of the targets that are already in place now and enable the financial inclusion targets specifically to be met perhaps at a faster speed?
Yeah, so I think we're fortunate in that we can see very clearly the path in front of us and the initiatives that we need to drive. So I shared, the work that we had done at a junior level to try and drive more access to finance for women. And I spoke a lot about, the advances we made in terms of the technology, the scoring algorithms, as well as the experience, right, that customers had. But in truth, what moved us from that under 25% mark to where we are now, which is 40% of the users on our platform, end users, are women, was the capital innovation, right, where we brought in impact funders into the fold. And because they have a different risk appetite and impact objectives, we were really able to reach more women. So I think that is something that we need to consider as we design products, that we need to combine, our innovation needs to be not just constrained to the technology and the product experience, but also capital. So that's the first thing. The other thing which gives me huge hope, and which I hope to see continuing to develop in the work that I do, is that the shape of work is changing and becoming more inclusive to women. We just need to accelerate that. And that is both for lower income jobs as well as in the C-suite. So starting with lower income jobs, loving the way that technology is changing the shape of this. So Copia, an e-commerce platform on whose board I sit, 80% of their receiving and distribution agents are women. These often are people who've been housewives or been running some sort of informal business, but now equipped with a smartphone, they have an income that is way above the minimum wage in that country, right, which is transformative because, as we know, women spend up to 90% of their income on things like healthcare, educating children, and so on. So that's great. Sweep South in South Africa is another example of, how technological platforms give people access to dignified employment and allow them to really build a track record which they can take to pursue larger opportunities. So I like that. And you can see I'm obsessed with how do we actually get money into people's pockets, right? So loving that. I think we need to do more of that. And then, of course, at a C-suite level, I like that for ourselves at Juma, we've done a lot of work to think about, what biases could exist in recruitment processes, train people around that. Once you've onboarded people, how do you actually include them in the sense of actually hearing their voice, right? So that those different perspectives actually translate into the way in which you are doing business. And I think we need to just continue to invest in that. We also support organizations like Girl Code, who are training the youth, right, to be the engineers of the future. I think that is also important. So all in all, optimistic but impatient.
I'd love to give you another minute, but we're out of time. It's amazing how quickly an hour can go. If you can give me your thought in 10 seconds.
Yes. There's actually a whole new segment of women that we now need to cater for. Sure. Women in social commerce. a whole new segment who are using social media to create dignified incomes.
So that's going to be part 2 of the series.
Absolutely, and we launched TWA to counter
That's fine. That's going to be part 2 of the series. I'm not sure where it's going to take place, when hopefully I'll be facilitating this discussion. Hopefully it will be here on CNBC Africa. But ultimately, I think that the consensus are being shared by the fantastic speakers, women doing fantastic things in the executive roles. A lot of progress has been made, but a lot more can be done. One of the areas it would seem being more impactful with the capital that is being allocated, and sharing the fact that the bank investing a lot more in female-led asset managers who are seemingly doing a lot more in terms of investing in businesses, women-owned businesses, underserved businesses that have been looked over. But we have to cut it there for now, and I'd like to thank all my guests for joining me on a wonderful, important conversation, really insightful in my view. Anne Alika, the Global Head Client Coverage, Standard Bank Corporate and Investment Banking. Also Dr. Franny Luthier, ma'am, I loved your insights. She's a Senior Partner for Southbridge Group and CEO for Southbridge Investments. Butle Goslar, CEO at Jumo's Africa region, as well as Irene Kiwa, co-founder and Chief Growth Officer at Daniel Labs, who has given us an idea of part 2. We'll talk about copyright issues and all that with her after this. But thanks also to you for tuning in, and I hope to do it again soon. Goodbye.